بسم الله الرحمن الرحيم والحمد لله رب العالمين والصلاة والسلام على سيدنا محمد وعلى آله وصحبه أجمعين. معالي الشيخ سالم بن مستهيل المعشني الموقر، صاحب السمو، الضيوف الكرام، السلام عليكم ورحمة الله وبركاته. Good morning, ladies and gentlemen. Before I start my brief presentation for today, I would like to record my thanks to Mr. Singh for his kind invitation to speak before such a distinguished audience, and for the team behind the scene who have made this event annual important events as it is today, and wishing them all the best in the future. My presentation here will simply look at some of the indicators that hopefully will set the scene for the debate that will follow. In one thing, the oil prices over the last 30 years has not been stable at all. As you can see from the graph in front of us, that what we have experienced in 2014 has not been a unique experience in the past. So if you see the first column or the first part of the chart, we can see that the biggest drop was not what we have experienced lately, but it was in 2008 during the financial crisis. At that time, over a 6-month period of time, the oil price dropped by more than 67%. The next big drop was in 1985-86. The drop was more than 62% from the peak. And what we are experiencing today is 46% drop from the peak in June of 2014. Obviously, before that, there was one in 1997, 1998, and the one that we have not felt it, but actually the drop was significant, more than 30% in 2001. So the volatility in the oil prices is a common scene, and that uncertainty about the future about oil prices should set the mind clear about the options going forward. Just to keep things in context, in spite of all these drops in the oil prices, the Omani economy has made tremendous progress. Looking at the size of the economy, between 1990 and 2000, there has been growth, but not as substantial as we have experienced between 2000 and 2010. This has made 3 times the size of the economy growing between this period, 10 years. And between 2010 and 2014, there has been substantial growth in the economy. So in spite of all these hiccups in the oil prices, the GDP or the size of the economy has grown significantly, which means that there is a lot of opportunities as well as challenges going ahead. What has contributed to this large increase in the GDP activities is 2 major factors. One is to do with oil prices and oil production, and the other one is to do with the government expenditure, which is in the second row of the table here. So we saw that the government expenditure between 1990 and 2000, there has been a substantial increase, but then a more significant increase, more than 3 times between 2000 and 2010. This has obviously created, again, buffer, a good experience, as well as challenges of the policymakers. And between 2010 and 2014, you can see there's almost double of the expenditure of the government. So the government expenditure has been instrumental in economic growth, in diversifying the economy, as well as keeping the private sector going in the future, in the past and obviously in the future. Another indication for banking, since Bank Suhar and other banks are very strongly present today, the credit to private sector, or the total credit actually, by the commercial banks, we can see the change between 1990 and 2000, but the major leap forward was between 2000 and 2010. Again, a substantial increase between 2010 and 2014. These are very significant indicators that we should keep in mind. Along with that, the government has been able to accumulate a very healthy financial reserves. This can be represented by the central bank's assets. That has changed, and you can see the change over the 10 years between 1990 and 2000 has not been that substantial. But look at the change 5 times the size that we saw in 2010. And obviously in 2014, another further increase in the reserves of the government. This is just as an indication to what has been accumulated in financial assets in other sovereign wealth funds, which are not captured by these figures. So what is the way forward? As we can see here, the IMF have came up with a report in May 2015 predicting what is likely to happen. All the GCC countries, without exception, will suffer from the drop in oil prices. There was a surplus of around 4.5% of the GDP in the fiscal side of the governments, and that will change, expected to change. Obviously, these are all predictions depending on where the oil prices will end up in 2015. So the prediction is the amount of decrease in the, or the amount of increase in the deficit will be equivalent to 8% of the GDP, which is substantially higher. And what will happen after that is obviously anyone's guess where things will end up in 2016 and beyond. According to the IMF, there is an expected losses of $380 billion because of the oil price drop in 2015. You can see the color of different countries. Oman is going to be substantially impacted along with Saudi Arabia and many other Gulf states, except in the case of UAE. The amount of impact is likely to be around more than 20% of the GDP, the effect on the fiscal side. So this is a substantial amount of adjustment that the government has to look for adjusting and smoothing this shock that is experienced currently. And we can see that the countries that has accumulated excellent amount of reserves, financial reserves in the past, the countries, as you can see in the top, UAE, Kuwait, Qatar, and Iraq, are likely to be able to weather this impact of the drop in oil prices for much longer. Countries like Oman and Saudi Arabia. Now, these two countries are very different in many ways. First, the size of the economy, and second, the amount of wealth, natural wealth each one enjoys. But yet, when it comes to the management of this shock, they are equally footed. So if the drop in oil prices continues, and this is a big if, nobody knows what will happen. Many economists and many prestigious places that has published data on the prediction of oil prices ended up wrong, and we are likely to see things unfolding as we go forward. But what is interested here, that Oman and Saudi Arabia are neck to neck in terms of their management of the financial wealth and the financial buffer. So in spite of, if anyone have looked at the amount of financial reserves of Saudi Arabia, it is exceeding $700 billion. This is not factoring in the war that has taken place recently in Yemen and the impact of that on the financial reserves. But obviously, we are not out of the norms, but actually, this is a testimony that Oman, in spite of its limited resources, in spite of its limited capacity for the financial reserves, it is able to hold itself in a very much equal footing with the largest economy in the Middle East. Just as an indication, how far did we go in terms of our diversification? This shows, the first part of the graph shows how the contribution of non-oil exports to the total exports. As you go to the right, you can see there is more diversity and more ability to manage and cushion any shock in the oil prices. At the moment, we can see here from Oman that about 20% of our export, total export, is non-oil exports. And obviously, that's still further way to go compared to other countries like UAE and other countries in the list that you can see in green color. Another issue to keep in mind as far as diversity is concerned, how flexible are we to manage our fiscal policy? And you can see the case in Oman, it's only 12% of the total revenue is non-oil revenue. So even if you want to increase it substantially, even if you want to double it, you cannot make up the differences of the lower oil prices. So looking for means and ways of enhancing the revenue from non-oil sources will not do the trick. It has to be done in line with the expenditure management as wisely as possible. And obviously, we are in the midst of a shock and the aftermath of the shock. How prepared are we? Obviously, the policymakers who are dealing with this issue and the challenges are, I'm sure, having sleepless nights in the past number of months and the months to come. If you can tell the policymakers it's going to be $50 per barrel, there's no issue at all. They can plan very clearly. But the fact that there is a potential to go up or coming down, that makes it more difficult. Do they cut now? Do they slow down in terms of rationalizing the expenditure? Do they invoke some of the oil revenues as quickly as possible, or should they slow down? This is most of the uncertainty that comes there. But sometimes uncertainty clears the mind. If we have that much uncertainty in the oil prices, something has to be done. How quick and how deep? This is obviously the policymakers will be in better position to make that judgment. But obviously, the outlook looks extremely puzzling, and it changes from day to day, as we can see the numbers on different sources from the TV or from computer sources, that oil prices are not stable and they are not comfortable at the moment. Coupled with our natural resources are very limited. According to the British Petroleum Statistical Review of 2014, the latest that has been issued, Oman has about 16 years of reserves. That is not the total reserves, but the recoverable reserves. So if we keep producing at the current rates, we're likely to last for 16 years. But this is not a new story. We have seen this in the 80s, and if we were to go with the figures in the 80s, obviously we had 20 years by 2000, we should have no oil at all. The same thing was said in 1990s. And now in 2014, we say another 16 years. This is only the recoverable part. Obviously, technology is improving, and there is a big scope that the oil can last for much longer. But at least these figures here puts our minds in focus that we have to work and work harder than our neighbors who are enjoying abundant resources, both on the natural gas as well as on crude oil. Now, I would like to share with you something that have came out very recently from the IMF. On the 5th of May, the IMF has published a press release on the consultation with Oman for Article 4. And they have made description, or they have made prescription to the government, which says that the government has a buffer to manage the shock that we are experiencing currently with the lower oil prices, both on the expenditure side as well as on the revenue side. On the expenditure side, the increase of the jobs should be stopped or should be rationalized. The employment benefit has to be freezed in real terms. Defense spending has to be rationalized. The phasing of subsidies has to be done as quickly as possible, and that has to be accompanied by a social safety net. And then they have recommended something which is very critical, to design a communication strategy that makes the public aware as well as supportive to any changes that are likely to take place. And then on the revenue side, they have come up with a list which includes, as normal from the IMF, issues related to taxes and taxes of all categories, whether it's corporate taxes, income taxes, VATs, property taxes. All these are on the line, on the card, and the government has been communicated to look into them and seriously consider them. Obviously, taxes on income in relationship to the response to the Majlis Shura when they have proposed to levy taxes on the expatriate remittances, they say that this is not the right way forward, it's not efficient, but if there has to be a taxes, it should definitely be on the income taxes. According to the IMF, the reform that takes place gradually and preserve, again, not to cut down the development expenditure, which is very important, are critical to downplay the impact of the lower oil prices and the impact on the economy. If there is a cut drastically on the expenditure, as well as on the development expenditure specifically, there can be a long-term economic consequences. So to balance out the short-term needs with the medium-term plan for the fiscal deficit or for managing the fiscal deficit, and to make sure that the development objective of the country are not derailed because of the pressure from the revenues, these are important issues to keep in mind for policymakers as we go forward. Obviously, these recommendations are not binding for Oman, but they are very important. They cannot be ignored. They cannot be ignored by the public. They cannot be ignored by whoever is financing the government deficit, whether it's local sources or international sources. They cannot be ignored by the credit rating agencies that are continuously monitoring the situation and rating Oman. This is just to tell me that the time is over. So in this case, obviously, while we do not have an obligation to carry forward these recommendations, we will be under pressure to do something. And obviously, as you can see, there is not much of the public announcement as far as rationalizing the expenditure or as far as revenue increasing from the non-oil sources. Does that mean nothing is done? No. There is a lot has been done in the past and will continue to be done. First, the government has two options. One is to go through financing the deficit in the last number of months from the beginning of the year today through different sources, local mainly, or to go and cut drastically the expenditure or to rationalize expenditure and push the revenue up. Obviously, the other side has not been done yet, at least not publicly, but I'm sure privately and communication among the different government agencies, there is definitely a strong recommendation and a strong force or strong push to cut down the expenditure as much as possible, but by 5% or more or less are not going to make much of a difference. Here, the government have decided to go on the first route. Since December 2014, there has been continuous issue of short-term and long-term government financing instruments. We had in December and February 2 issues of government bonds for about 400 million. Since March 2015 till this week, the government has raised about 560 million riyals out of treasury bills, plus other sources. So I estimated there is around more than 1.2 billion riyals Omani has been raised by the government from the internal sources. Obviously, we have read the news about the sukuk as a new issue coming up, around 200 million, and probably the government will be looking at international financing sources. So obviously, here the direction for the government is to weather the first few months through raising debt financing, short-term and long-term, and going forward, obviously, to look into the expenditure, to look at the revenues are definitely important issues. But the more important issue is not to lose track of how important it is, the fiscal policy for the economic growth. And if you don't manage the fiscal policy well with the challenges, we will hurt the economy, and more importantly, will hurt the private sector. The private sector has to be stabilized during this challenging time for the government. Private sector, if we do not stabilize, if they are overburdened by laws and regulations, by taxes, if it's been invoked, then obviously it will go under with the business trend that becomes pro-cyclical type of management, and that can be very devastating, knowing that it is difficult to predict what will happen to the oil prices in the future. It is important to keep the private sector vibrant. It is important to address concerns and bottlenecks of the private sector so that at least the impact of the whole economy will not be as severe. And it's important to keep in mind the developmental issue of the country. We cannot stay for long without employing the young Omanis, and preferably in the private sector. And this is something that will accumulate. So we cannot cut down to the bone where there is no prospect for growth and there is no prospect for employment for the young Omanis. This is all I have for today, and thank you very much for your attention.